What if they were to market much higher? What if they were to market to $40,000 is a number I see a lot of people talking about. I don't think it's just playing the arbitrage between the spread between London gold and New York gold, which is 20, 30 bucks higher in New York, signaling a massive shift to get gold. Look, you have these unallocated positions that need to be backed. It's put London in a very precarious position. London is supposed to be a T+1 delivery, where your trade is T Monday, +1 is Tuesday, Wednesday you should have your gold. They're now T+6 to 8 weeks. They say they don't have enough manpower or enough trucks. I mean, what kind of crock of shit is that? The Bank of England doesn't have enough trucks, you're telling me, right? So this is all...
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
There's a lot of supposition. I understand that. There isn't anything definitive, but what I will tell you is that what is happening with the gold imports into the COMEX and all of the movement around the periphery is so far outside the realm of anything I've ever seen that I tend to believe that it's something bigger. My guess is that this is gold that they would want to use for Judy's plan. You see, who the hell wants to hold U.S. treasuries anymore? They've been weaponized, they've been inflated, interest rates are rising, which is, again, hurting the value of the 10-year treasury. And even Judy said, you know, who would want to hold duration treasuries any longer in this environment? We've lost confidence. And as Zoltan Pozar said long ago, this is about transparency, which would be blockchain. This is about commodities, which would be gold. That's Bretton Woods 3, which is loosely a new system he describes as transparency in commodities instead of opaque debt instruments. But what has Elon Musk said? Let's put all of the government spending and the debt, all of it, put it on the blockchain for everyone to see. Well, how about the gold holdings? Judy said, I would like to see them issue stable coins on part off of the gold-backed treasuries. All of this could be on the blockchain for everyone to see, giving immutability, transparency, legitimacy, confidence. That to me is where it seems to be going. Now, will they revalue gold? Look, it's valued at 42.22 on the balance sheet. They could market to market at where we are now, 2,900 and change. That would inject, 700 or 800 billion into the treasury. What if they were to market much higher? What if they were to market to $40,000 is a number I see a lot of people talking about, which would represent somewhere in the neighborhood of a 40% gold backing based off of M1. There are people saying 24,000. There's all sorts of numbers, but you know this, that every $4,000 increase in the price of gold would give the Treasury General account $1 trillion free and clear for every $4,000 increase. Now, it wouldn't be that difficult. Trump would tell Scott Bessent, the Treasury Secretary, to instruct Jerome Powell to revalue the price of gold. And that is what it would be. I mean, whatever someone is willing to pay, especially an entity like the U.S. government, is what the price would be. And, when you talk about Scott Bessent, as he was a hedge fund manager, and running a hedge fund, a big one for Soros, his largest holding was gold in that holding, in that hedge fund. He's talked about his largest personal holdings being in gold. He mentioned recently, now he backtracked from it, which I think maybe was just doing triage, but he recently said his intention is to monetize the asset side of the U.S. government balance sheet. If you look at the U.S. government balance sheet, it's horrible. There's just over 5 trillion in assets, the largest being student debt of about 40+%. Not going to monetize that. The next largest is military bases, bullets, guns, airplanes. Won't monetize that. Now you could monetize number 3. That's the land. You could lease it out or do things to derive income from it. But the most logical one would be gold held in the revaluation account. Will they do it? Don't know. I don't think it's to bring gold home to restock Fort Knox before they do the audit. I don't think that at all. But nonetheless, Danny, whatever is happening is so far outside the realm of anything we've ever seen. Outlier, it just doesn't even begin to describe what it truly is. So crazy things happening for sure, man. Well, there's a lot of stuff going on with SLV too, just to mention, and then I'll comment on that. But The borrowing costs for SLV shares have soared from roughly 0.5% to north of 12% in a few weeks. That's a 24-fold increase. The number of shares available to borrow, to short, in other words, have collapsed from 10 million to 10,000 in a few weeks. That's over a 99% reduction. There's over 950 million ounce short position in SLV. This is a short squeeze waiting to happen. And you're right. I mean, you got BlackRock and JP Morgan being the custodians of these two funds, whereas instead you have Sprott funds are held at the Royal Bank of Canada, I believe. At the Royal Canadian Mint, and have more legitimacy. I think people believe that, and rightfully so. I mean, I've known Eric Sprott for a long time, and I've worked very closely with the Sprott companies here in the United States, Sprott USA and Rick Rule when he was their chairman or their CEO. I've worked with their clients for a long time. I hold Sprott in very, very high regards, and their products, and in a product that is, I guess you could say, a derivative of the real thing. Now, you can take possession of the Sprott gold and silver out of the trust, but it's a 400-ounce gold bar out of PHYS and 10 1,000-ounce silver bars out of PSLV. It's just more, I think it's considered a more authentic way to own the metal. You look at what happened in 2021, there was such a drive into SLV and GLD that they came out and basically changed the prospectus over a weekend, saying that, there may be more shares than there is metal behind it. To me, I think GLD and SLV are two of the worst products I've ever seen in the metal space. And if you read the prospectus, pages 6 through 12, anyone who holds it would dump it immediately if they really took the time to read it. That's not the case with PHYS and PSLV, which is there. We know that, but when you take a look at SLV and GLD, they have statements in there where the custodian, which would be, BlackRock and JP Morgan, have statements in there such as the custodian reserves the right to use sub-custodians, but is not responsible for their errors and or omissions, that the custodian doesn't reserve the right to visit the premises of the sub-custodians where they're storing the metal. Sorry about that. And that if the bars that these sub-custodians are holding do not meet London good delivery standards, they are not responsible for that. It could be lead bars painted gold. Sorry, it's not us, it's them. They've distanced themselves from fraud so tremendously, it's crazy. And then when, just a flat out realization that the fox is guarding the henhouse, that being JP Morgan and BlackRock, I think smart money would move the other direction. Now, I can't really give you a definitive answer as to why, but I wouldn't own GLD or SLV to save my life. I would own PHYS and PSLV. I do not. But if I were going to buy a paper form of gold and silver, that would be the only ones I would own. So it's certainly, in my mind, and those who understand this space, a far better choice than those two. So maybe that has something certainly to do with it. But, you're not going to be able to see the same type of shenanigans with PHYS and PSLV, which is a closed-end fund, as you do with the GLD and SLV silver ETF. So that's just my own take on it. Not exactly sure what it means, but I would assume smart money understands some of that.
Crazy things happening for sure, ma'am. Who the hell wants to hold U.S. treasuries anymore? They've been weaponized. They've been inflated. Interest rates are rising. What if the U.S. suddenly revalued gold to $40,000 an ounce? What if the government had a secret plan to use gold to wipe out debt and reset the financial system? Andy Schectman just dropped some shocking insights that could change everything we know about gold, the economy, and your wealth. Stay tuned, because this could be the most important warning yet.
Don't forget to hit that like button. It really helps out the channel. And if you want to stay updated with more content like this, be sure to subscribe and click the bell icon so you never miss a video.